Hello and welcome to our viewers on cruxinvestor.com and to our listeners on Cruxcast, our podcast series. And to those of you who are new to Crux Investor, please remember to subscribe to our YouTube channel. We're talking today to Christian Milau, he's the CEO of Equinox Gold. He's going to talk to us about Ross Beaty, ETFs and their effect on the marketplace, M&A, their new investment partner, and also his view on the gold market. You can see the timestamps of all of those topics on the description below. But right now, let's talk to Christian. Hello, Christian. How are you?
Yeah, good morning. Great to be back.
Yeah, we spoke back in February. Lots happened since then. I guess we'll get into that in a minute. But why don't you kick off for newcomers to the story? Give us a sort of 1-2 minute overview of the business.
Yeah, so we're now a mid-tier gold mining company based in the Americas. We've now got one producing mine in Brazil, which we'll talk about, but also we've got a producing mine in California, and we've got another one we want to build in California in the next starting in the next 6 months here. So we're now going to be a 3-asset company that's focused on the Americas with roughly 200,000 ounces plus of production today, and with a goal of going to 400,000 to 500,000 ounces of production in the next few years. So we've got a nice platform in this kind of market where gold seems to be picking up.
Yep. Okay. Let's get on to that in a second. We've had a few questions in from subscribers. I'd love to throw a couple of those at you. They're really about the origins of this all, because obviously you've brought together 3 assets, gold assets. You've got some big names attached to those assets, Ross Beaty, Richard Wark, and your team, obviously. Tell us about that first conversation that you had. I mean, how did this come together?
Yeah, it was interesting. I guess with Ross, he had a Brazilian asset and company called Anfield back in the day, a couple of years ago. Yep. We started with Luna Gold, which was the Brazilian asset Arizona, which we now have put into production. Mm-hmm. We had some commonality, and we obviously interact here in Vancouver on a regular basis, see each other. It's a small city. And we'd always talked about how's it going in Brazil and what are you planning to do in the future? And we realized that we had the same vision in gold. We both want to create sort of that mid-tier to larger gold mining company at this bottom point of the gold cycle. Ross's vision is really around building something in gold that's very similar to Pan American Silver, which is now an 11-mine company, which is a good, larger silver company. He wants to do the same in gold at this point. And my view is do the same as we've done recently, myself and some of the other team at Endeavor Mining. Start with 1 asset and try and build it into 4 to 6 assets over time. So we really had the same vision. And Ross said, look, he started his career with Equinox Resources back in the 80s and 90s, and that was a success. And he wouldn't mind bookending it with something like this at the end. And we suggested the name Equinox Gold, and he loved it.
Right.
So, hey, that's into my career.
So, I mean, is it one of those the sum of the parts stories? You get some people are very protective over their assets and they want to do their thing and they don't need any help. But you guys all seem to have a track record of bringing together assets and building something bigger and therefore hopefully better for shareholders. Is that what happened?
I absolutely believe that. I mean, to put it in real context, we sat in a room together, myself and Greg on our side, Richard Wark from the Newcastle side, and Ross from the Anfield side. And we sat in the room for a couple of hours and we said, hey, with no advisors, no lawyers, anything, we said, hey, what is our vision? It was common. Who could run this? Who wants to be the face of it and contribute to the financing of it? And we actually came up with a board and structure very quickly and evaluation effectively that at least got it kicked off. And that was all because we had the common vision. Richard Wark, again, has worked with Ross over the years and building companies like Ventana and other things.
Right.
And Ross tends to be more of the market-facing person of the group and was very happy to take the chairmanship. And obviously myself and the team are very happy to run the business. So there was no stepping on each other's toes. It really fit together nicely.
So how does something like that work? You've got 2 assets in California, you've got 1 in South America. They're all gold, so there's that in common, but they're all at slightly different phases of development. So how did you imagine that coming together, and how's that indeed happened?
I mean, it almost worked better because they were at different stages or phases. So we had the 1 producing asset in California. So that's kind of our starting point. We can actually use that for leveraging off knowledge, skills, etc., and reporting, all these different sort of techniques of managing the business. and then we had one in construction in Brazil, and then we had a third one which is sort of in that study phase in the pipeline that could be constructed after we finished Aurizona in Brazil. So when you put them together, you actually have a nice runway to becoming a mid-tier producer into the system, rather than just slamming together 3 operating mines with different cultures. We're able to actually put them together, build the culture as we go.
Right. Okay. Because I actually watched our interview from February this morning. Just run through it, remind myself what we talked about. Now, the big theme that came through there was not only do you have these 3 assets, but you've got access to cash. You've got both Ross and Richard are very capable individuals with track records. You are too, but cash wasn't an issue for you. And in where we are in the cycle, we talked about how advantageous that is for you in terms of being able to pick up assets cheap, and perhaps we can get on some M&A in a minute. But can you just again to remind people, on the financial side, where you started. You had these 3 assets. Some assets you offloaded, some on the copper side. But what did you start with? And how did you value those? And we'll maybe get into where they are today.
Yeah, so when we did put this together, we had obviously the 3 gold assets, which were going to be the core to our business. We had a couple of, I'd call them smaller. One was a processing mill in Peru. One was a small gold project in BC. And then we had a bunch of copper assets. So what we decided was we're going to focus on the core value-creating gold assets. Mm-hmm. We spun out the copper assets last summer into a separate vehicle, which I'm happy to talk about, but we're excited. And we still own 40% of, called Solaris Copper. Then we sold the mill in Peru to a local operator, I would call it. And then we sold the BC gold asset just recently to a local group here because they were too small, not going to create enough value in a company now our size. We're now $600-700 million market cap.
Yeah.
So we're focused now on the pure gold assets of scale.
So do some simple math for me. So you brought 3 assets together, which were valued at what?
Oh boy, I guess when we brought them together, we bought Mesquite for just over $150 million. Mm-hmm. Aurizona and Luna Gold, when it came in, I can't remember the exact valuation, but I'm going to say it was between 150 and 200.
Right.
And then Newcastle again was 150 to 175 million dollars. And we put them together. The nice thing today that we're excited about is you see that our market cap is now greater than the sum of those parts.
Yeah.
We're now
725. It told me this morning.
There you go.
Yeah. But how much money have you raised in there as well, which is obviously G&A, capex, etc.
Yeah, so we probably during that process we probably raised, I'm going to say it's $50 million, maybe it was up to 70, to help finish the funding on Aurizona in Brazil. But what we've really done on the funding side that's more interesting is we've restructured the balance sheet completely, which again I'm happy to explain.
Yeah, well, tell us about that, because obviously we've seen mention of Abu Dhabi Sovereign Wealth Fund in there, and obviously project refinancing as well. So why don't you give us that before we get into the projects proper?
So everything over the last 18 months has probably moved faster than we even expected. We've had great support from guys like Ross and Richard and some of our core shareholders. And so we originally had a project finance loan from Sprott that was a coupon of 10% that was financing the build in Brazil. It's expensive money, but we were a single asset development company. It was unfunded when that went into place. So it was market. Mm-hmm. Then we had an acquisition facility from Scotiabank and a group of other lenders that came in to acquire Mesquite. So you had siloed structured financing or debt that sat at the asset level. What we did in, I guess it was February we announced, and we've just completing it right now, is we've paid out the actual loan that was project finance in Brazil, replaced it with the Mubadala convertible note, which is sitting at the corporate level and paying a 5% coupon, and brings in a partner that is basically $1 trillion sovereign wealth fund that is there to help us grow the business in the future. So they've replaced some expensive debt with sort of half the coupon cost, but they're also there to grow long-term as a shareholder and funding partner. So you bring that up to the corporate level. And the second piece was we took the same banking group that funded Mesquite and repaid and refinanced that acquisition loan and brought it up to the corporate level. And now it's a corporate revolver that we can borrow and repay. It's a little bit larger. Instead of 100 million, it's now 130. So we now have all of our debt sitting at the corporate level. All of our cash flows are fungible and free to move amongst all of the assets in our organization. And they're all growth partners. So as we grow, they all want to be able to fund us in a bigger way.
Yeah, I mean, and again, we did talk about that last time, and I do want to talk about it in a minute. But let's just quickly go through, I think, a point which is talked about in the chat rooms, etc., and that's your ability to prove the economics around the Brazilian asset and get that going, bringing that to market. So where are you with that?
Yeah, so we finished the construction in, I would say, sort of early May, and we were commissioning the asset. It was probably about a quarter behind, so a little disappointed with that.
Right. Why was that?
Basically, it was no major factor. I mean, the rains were very heavy this year. I think we've had 3.5 meters of rain in the first 3 to 4 months, where normally you get 2.8 or 2.9 for the whole year. So it was a very heavy year. So doing electrical terminations and that in the rain is, you're probably at 50% productivity for that work. There's a bit of extra piping and scheduling work at the very end. So nothing that I would say was a major incident like the mills, falling off the truck or the ship or something.
Right, and then no issues. Sorry, I just want to check. There are no issues from the Brazilian government. Obviously, very high-profile incident earlier this year. But are they more nervous? No, the Brazilian government,
give them their credit. They actually delivered us our operating license the day we poured gold. Normally, it comes about 6 months after you pour gold. So I would say actually a real tick to them, a check in that box where they delivered it early. And in terms of inspections on tailings dams, which obviously are a big thing in Brazil right now, as soon as that incident happened early in the year, they were inspecting all the dam sites around the country, and they did come to ours, of course, and we were just in final stages of getting it into state of readiness. And basically, our design is not an upstream dam like Vale had there and had the issues with, which is inherently less stable. This is downstream and center line, which is inherently much more stable. And we're very happy with the inspections, actually, the results.
So what do you think's happened there? Do you think, obviously, it can go one of two ways. People, the government can get, or the Ministry of Mines can get very, very nervous and take longer to get things done, or because it's damaging to the reputation of what is a mining, big mining country, they try and accelerate things to say we're open for business. I mean, what's your sense of what's going on there?
I almost think they're accelerating things at the moment because of the urgency and the need with the recent incidents there.
Right.
And I do think when they're not happy, I would suspect it was going to take longer to permit. There will be more hurdles to jump than that. But if you're doing things on the international standard basis, that it is expected of companies like ours, you really shouldn't have problems.
Right.
And we haven't experienced any.
Right. And so the team that are down there, they're experienced with South America, Brazil in particular, quarter behind, but unfortunate event is what you're going with.
Yeah, and so what we said was, all right, sorry, we're a little bit behind, it's a little bit over budget, or probably about 10% over budget overall, which in the scheme of things, 3 months and 10% over is not the end of the world. It's a bit of a shame. But the thing part is, since May 14th, when we did pour gold, we've now gone for about 30 days of production. And we are now producing or putting through the mill more than the rated capacity. So I think we're at 8,000 tons a day of our rated capacity. And some days we've gone up to sort of 10,000 tons. So it's very nice to see that you're 10% plus over.
Right.
The mill is actually capable of performing at the expected levels.
Right. Were there any doubts in your mind as to whether Brazil would work out or not? Or is it all gone swimmingly?
I think anyone who would say there isn't a risk or doubt would be kind of kidding, but we did feel that we were investing in this project to make it successful. The idea was not to cut corners because of the past history here. When they originally built this in 2008 or 9, they didn't have a crusher at all, and they didn't have a proper milling circuit. It was a fairly old 60-year-old asbestos mill from Quebec, so it was almost set up to have challenges, and it still performed okay. So we figured, if we spent the money and put in the proper equipment with professional contractors, you're bound to have good success here in due course.
Right, okay. And just so, if I may come back on the refinancing that you did, do you think those are competitive? I know you've got it all at corporate level now, which is much easier to deal with. And you've refinanced it. You've got a little bit more cash there, a bit more flexibility. Are you happy with the terms there, or is it a case of actually, I like who it's from? Because obviously Abu Dhabi Sovereign Wealth Fund has a lot of cash available, and if it likes what you're doing, that bodes well for M&A activity, which we talked about previously. So were you happy with those terms?
We're extremely happy. I mean, when you look at that convertible bond, we have a partner who is not out there shorting or hedging your stock, like a normal convertible might be with normal hedge funds and ARB funds. They're a
Right.
long-term investor. They have no short-term time horizons. They wanted to work with Ross, and Ross has probably been talking to them on and off for at least 5 or 10 years. And I think they were excited to partner with someone to build a great gold mining company that they could trust. And so I think we got really good terms, and we looked at various market comps and what we might have been able to do in the market. And I think we've far those.
Right. And so why a convert? They could have structured it any way, right? They got the money. They could paper it up anyway. So why a convert? Why did that work for you?
It's interesting. I mean, at this stage of our evolvement and growth and development, they would like to be a long-term equity holder, but they're used to actually making investments. So I'm going to use a big round number, but of $500 million. So it's a very small investment of 130 million for them to come in. There was a debt instrument piece in place already that could be refinanced and clearly replaced. And it gave them that link ultimately to being an equity investor, which we would like them to be in the long term, because I think they would be a long core stable shareholder along the likes of Richard and Ross. So it was kind of almost this hybrid interim instrument that allowed you to solve your current expensive debt situation, but sort of link them into a long-term equity position. And it's a smaller ticket than they're used to. So it does, I guess, come in a form that gives them a little more security on day one than it would if it was pure equity on a small check basis.
Yeah. Some whatever what is the coupon on that?
5%.
5. Okay. Wow. Okay. Not bad.
Very good.
Pretty good. And what are the rest of the terms on that then?
So it's a 5-year term. It's a 5% coupon. It converts at a 25 to 27% premium, depending what share price you're using.
Right.
So that's $1.38 Canadian.
Yeah.
Interestingly, when we announced it in February, the share price went up, and we've seen so many people announce convertibles that are market oriented, where the actual share price goes down. People are shorting your stock.
Yeah.
The ARBs and funds. Ours did the opposite. So we saw it as a nice vote of confidence that we had a long-term partner. And one of the biggest things I had was I was at a conference at the time. I had a lot of other peers come to us, say, can you make an introduction? How can we get access to that capital? It looks like a great partner that's there to stick with you through the ups and downs of the cycle. And right now, as you know, we're towards the bottom end of our cycle. And the smaller the company, the harder it is to finance. And I think we've been able to above our weight a little bit there.
Yeah, I mean, just stay on that point a bit. So, I mean, you did have a bit of a spike, and then it kind of came down as low as 101 on a couple of occasions, and you're back up at 131ish again. So, you've had a few. What do you think those drops were? I mean,
well, the one thing for sure, I mean, gold, I think, had its dip, although it's obviously much more positive. I think it hit 1350 this morning, so it's much more positive. I think we're in the 1270 to 8090 range. And below 1300, I see there's not a lot of conviction from some of the precious metal funds, some of the generalists. They really want to see it pop over 1350 to really get some confidence. The other side was we were right in that crux period of finishing off Arizona, and until you announce you poured gold or you're in commercial production, people have their doubts. And I guess rightfully so. They want to see that there's no hiccups and major issues along the way. And we weren't able to announce that till May 14th. So we had the double whammy of those two items, I think.
Right. So, okay, understood. So Mubadala, they're in, they're a partner now, equity and debt. What are their expectations? They seem no board seat for that, but they have a big say in what they expect you to do, presumably, or are they a passive investor?
No, they do have a board seat. They do get one board.
Sorry. Okay.
Yep. And they are partners with Ross in many ways here, and they see themselves on a pro forma basis. They would be an 18% shareholder if you were to convert it all. Right. So we think of them as a core shareholder also, in the long term. So we very much want to work with them, and their vision is actually very similar to ours, and they want to grow into a larger scale gold mining company. So we will definitely look to them to support us on growth activities, being acquisitions or growth internally.
So if we go back to the first question, which is how did you guys come together, and what was it? It was a common thought about what you could do. With Mubadala on board, has that thought changed? Have your horizons expanded?
I think it gives us, maybe it gives a bit more impetus to move quicker, or at least it gives us the ability to think a bit more actively about how we can grow this business now,
Right.
because we know there's availability of capital in the nearer term, and we don't have to necessarily go and source it from new sources if we do find an acquisition opportunity.
Yeah, so that saves a lot of time. So again, just remind people the type of company you are. You're kind of a bulk processor of gold. You're not chasing veins around the place. So if you just quickly describe that for people, because I want to ask you about that.
Yeah, I mean, our two operating mines and our third to come into operation really are larger open pit mines. So they're big dirt moving exercises. You sort of described it. Our goal here is to build scale and to be a growth oriented company. And we're not shying away from growth. And a lot of the bigger companies in this part of the cycle have been paying down debt, and I'd say call it right sizing, or making themselves smaller and selling off assets, where we're trying to actually do the opposite, because as the cycle does turn, we'll have already been ahead of that curve. And we've set a target, and it's maybe a round number, but we'd like to be 1 million ounces a year by around the end of 2023.
What are you today?
So we're probably 200 to 230,000 today, and with the assets we have in our pipeline, we could go to 400 to 500. So roughly halfway there.
Right.
And so the goal, you'll need to add another at least 2 assets, I think, along the way to get to that sort of mark. And it doesn't have to be 1 million, but it's a good target.
Yeah, nice round number, as you say. So if I look at the type of company you are, the type of business that you're good at being, this large earth processing business, you've got the skill sets there. To find those types of assets globally at the moment, well, I know you're kind of America's focus, but that, I guess there's no restricting you. People don't sell good assets cheaply, and the gold price is going up, right? So have you guys found things that you're looking at, or are you constantly evaluating now? What's the chances of some M&A activity this year?
Yeah, I mean, we've been really inward looking because of finishing off the build at Arizona and finishing off the integration of Mesquite. So I'd say we hadn't been looking externally, but I would say in the last month or so, Greg and Ross particularly have gotten really active again, thinking about what we could acquire. And so you look at several categories. You've got single asset producers out there. You do have a few multi-asset producers that are listed. You also have the major gold companies emerging, and there will be some cast-off assets or some they'll sell that they may be good or not good, but they also might be just too small for them. And that's one of the challenges now as a big company, and they might fit us perfectly. There are a few private assets owned by private equity groups that will come available in the next few years. So, and then there's the smaller strategic assets that might be earlier stage for us. Maybe they're not perfect for us today, but could fit into our pipeline in a year or two. So there's a bunch of different categories. And we prefer to be in the Americas to start, but we aren't completely closing the door to Europe and Africa and Oceania necessarily.
Yeah, I mean, I think there's a lot of people with a lot of ideas, and I think it's like when a celebrity turns up in a capital city, people talk about it, and I think Ross has been spied at various locations, so people are making assumptions. Not least various parts of South America. So it'll be interesting to see where that goes and where that leads. But now's the time, from what you said before, now's the time. Now, while it's cheap, that the price of gold is going up slowly. The confidence is slowly well, would you agree with that? Is it slowly returning?
I think it's slowly returning, but it's still, when you talk to our peers and you're out there, it's still pretty depressing, maybe not the right words, but a bit dour, but people are pretty they're struggling to find new money, shareholders, people to get invested and interested at the smaller scale. And I'm talking sub $1 billion sort of market cap. Interestingly, it was 2 Fridays ago, we had a big block trade for 20 million shares.
So, yeah.
And Sandstorm sold their whole position to a new long-term only fund who is not a gold investor. I mean, they do invest in a little bit of gold, but historically they invested all across different sectors, and they have a good 25-year track record. So we're really excited to see that kind of money coming into our stock, number one, but also into the sector where there are people who are generalists who've been talking about investing in gold, who are now taking some action. And I think this last little tweak here where, the dollar hasn't fallen off a cliff and it's stayed reasonably strong, the markets are a little bit wobbly, and people are looking for somewhere else to invest their money, and gold has become a little more popular. And I think getting close to 1350, and maybe if we can hold it for a little period here, I think there is some conviction that we'll start coming back somewhere above 1350. Could we drop back down? Absolutely, but it does feel a little more positive.
Yeah, I mean, it does. I think, Ross was interviewed recently talking about the gold price, and saying in end of 2017, 2018, even though gold price went up, the equities fell down. These are sort of strange times where normal rules don't seem to apply. And we talked previously about the distractions of cannabis and Bitcoin and blockchain before that, and I think, well, Bitcoin is coming back again. But do you think those distractions have gone away, and this is just about people wanting to sort of see how the geopolitical dust settles, or it's just more fundamentally about the dollar?
I think some of that speculative money in cannabis and cryptocurrencies has come off the boil. I wouldn't say it's gone away, because people are still making some money, but it's not easy money anymore. And I do think consolidation in both those sectors will happen. And people lose interest when they can make a quick dollar in the first 3 months of investment, And I think gold is seen as now coming to the right point in the cycle. And I think with the market sort of rolling over, I don't think anything major has happened there yet. And the dollar may be going to have a rougher patch with all these trade issues hanging out there and all the excess debt in the system. And interestingly, for the first time in years, they're talking about interest rate cuts. And I'm actually surprised they're talking about that so quickly and so soon. That seems like, to me, a little early. But if we're talking about interest rate cuts, it can only be good for gold, because it'll probably impact the dollar ultimately. And right now, gold is seen as one of those bombed out industries and sectors that most other sectors are not in that position. Most other ones have had a good run over the last 9-10 years, at least at some point. So we are maybe going to be the one sector that's seen as having some value today.
Yeah, it'd be interesting to see how it plays out, because I don't think the normal rules have applied over the past couple of years with regards to gold.
It's complicated now, right?
Yeah,
and that's the hard part.
Very complicated. It is very, very, very difficult. Now, you said something like you had a throwaway line there. You're no one unless you're over $1 billion, right?
Yeah.
You're at 725. Another acquisition, you could get to $1 billion, but like you say, $1 billion company, that's nothing really, because
for the US it isn't.
For the US it isn't, but also, is that how you measure yourself? Is it to do with market cap? Is it to do with shareholder returns? Is it to do with how many assets you got? Is it to do with the potential exit in the future? What are you targeting?
The thing that really matters is shareholder returns here, and the reason I say that is, Ross owns 12%, Richard owns about 6%. I have my small stake, but it's very meaningful personally. I really don't care if I'm $1 billion company, $500 million or $3 billion.
But you've got a 5-year plan. We talked previously about a 5-year plan. You've got a 5-year plan. Today doesn't matter so much. It's like, where's the end point? And I assume
it's not a quarterly business. We're trying not to get
business. Right. Okay.
Quarterly result or whatever. That's something where the UK, I do actually admire the system where it's on a 6-monthly basis, where in a way it allows management to put their head down for every 6 months and focus on the business and not have to worry about each quarterly reporting period. But we have that 5-year plan. We're working hard to get towards it. We've now put in place the financiers to allow us to, we believe, is deliver it. And interestingly, that $1 billion mark, that's not exactly right, but if you're not in any of the indices and the passive funds, and I know there's a big difference between Europe and the UK in particular versus North America now. So much of the money over here in North America has moved into the ETFs and passive funds.
I was going to ask you, has that been distracting for you? Sorry to interrupt. So I was going to ask you, how distracting have ETFs been to you as a company?
It's very distracting, partly because you can't talk to them, right? How do you convince them to buy your shares? Because they have to buy or have to sell. But on the other side of it, we are not in one ETF or indice, but we are getting on the cusp and threshold of getting into them. And once you're in them, and you have to have that buying. I've had someone say to me, there's 30 million shares worth of buying coming once we get into GDXJ, and our key stumbling point is liquidity. But with this big block trade last week or the week before, and the daily liquidity over the last few weeks is well in excess of 1 million shares, we should, in due course, get a good shot at getting into the indices later in the year. And what we're going to do to help that along is work hard to list in the US, and to move up to the TSX. We have 2 California assets, and we have a lot of US shareholders and interested parties in the US. I got to believe that both of those events will help us, in addition, add liquidity in a really good market.
I think, well, for sure. But so, what do you think the criteria is to get on the GDXJ?
I mean, you do need to be a certain size in that, and I know lots of companies are a lot smaller than us that are listed, but it's roughly $1 million a day of trading.
Right.
That's the key one, and it's over an extended period. And I can't remember if it's 30, 60, or 90 type days, but it's long enough where you need to keep it up, and you can't just have these little blips. It's going to get you in there. So our goal really is to trade for the quarter, at least over a 90-day period, $1 million a day plus, and look to get added to one of these the indices later in the year. And part of the other benefit to us is we'll have 2 operating mines. I mean, we haven't had an operating quarter yet from Arizona, so we've got 2 operating quarters or 2 operating mines for a quarter or 2, and you're in various different stock exchanges have greater liquidity. And we've had this uptick in gold. I got to believe that momentum is moving us in the right direction.
Right, I'd agree with you, and I think that's good news that you're at that point now. Just on the market still, we talked about ETFs, but people talk about the sector being underinvested. Okay, you know what that means. That's got to be a good thing for you, hasn't it? In terms of what you're trying to create here, the scale of what you're trying to create right now.
It's fantastic in a sense, because we're trying to build something that will be an investment of choice when it's not underinvested. When that generalist money and the allocation of funds that need to have whatever 5 to 10% of their money towards something like gold or harder assets, would be one of those investments of choice with liquidity that's high enough to allow them to invest in our stock, but also to get out of it. And that's what a lot of investors need to know, is they can get out when they need to.
Yeah. So, okay. Can we just come back to the assets side of things? If you're getting a couple of assets into production now, the ASIC is the ASIC. You've got a good. We talked about your team previously. They're been there, done it, got the t-shirt kind of guys. But you're trying to lower the ASIC, increase the margins here. I mean, how much time and effort are you spending on that? Because we've talked about a lot about M&A now, but can we just talk about the projects themselves? What have been the issues been this year that you've been trying to overcome? I always focus on ASIC because it suggests margin to me and talks about profitability, hopefully. So what are the issues that you've identified that you're focused on with your team?
Yeah, I mean, for Arizona and Brazil, getting it ramped up and running smoothly is the first thing, and then working on actually making sure your costs are nice and steady and where you expect them to be. So the benefits with Brazil is we now are coming through that period. I mean, if all goes well, I hope certainly sometime early, ideally in Q3, we're getting into commercial production. Then we start measuring it on a ongoing cost basis. And the benefit at the moment, we've been trying to make sure that all of our inputs and supplies are as cheap and as we'd expect in this type of market, where I do think it's not a huge demand for things like cyanide and power, et cetera, in these remote regions. I think labor has been pretty good to get recently, because Brazil hasn't gone through a great boom recently. They're probably coming off some highs a few years ago. So we've been able to get reasonable, let's call it skilled labor in Brazil. Our supplies have been at reasonable prices. Power rates are pretty good in Brazil right now. We have hydroelectric power to the plant. And then, I think we're setting ourselves up well with a good mining contractor as well that has great experience in Brazil. So our key components of the costs, you got to focus on locking them in, getting good contracts, getting good supply so you can rely on it. We've kind of come through that period now. And now if your mill is getting the good throughput, your costs just sort of fall out of that. And the other benefit that we have no control over, obviously, is the exchange rate. And in Brazil right now, it's been in that 3.8 to 4 real to the dollar. Historically, it's been lower. So there's been obviously the U.S. dollar has been strong, so it's hit the kind of other currencies, particularly, I know Australia, Canada, Brazil have been weak, which is obviously a benefit to producers like us in that region.
Right. Okay. And I mean, I think that's true. The exchange rate does hit people in different ways. Just on that, I mean, this is the whole point about having multi-jurisdictional de-risking of your assets. I mean, you're America's focused. Will you continue to do that? Obviously, with this access to even more money than when we last talked, is that a key driver for you in terms of your de-risking process?
Yeah, I think having 4 to 6 assets is ideal. Maybe 7 or something. But
where it's America's focused? Is that where you're going to stay with? Is what you know?
America's focused. I'm not saying we wouldn't go east or west of that, but I think it's easier to run. Our corporate offices in Vancouver, time zones are extremely good for South and Central North America, and travel is actually pretty good. I mean, to get to our California sites, you can cover them both in a day from Vancouver effectively, and Brazil's a bit further, obviously. But I think we can manage it fairly well in terms of time zones and communication. There's also travel, and we prefer to stay in that kind of time zone.
Okay. And I just want to sort of I want to talk about this coming year, just in general terms in a second, but just remind people in terms of your remuneration, etc. And you did tell us last time, but I thought it's interesting and worth repeating in terms of you got some skin in the game, etc.
Yeah. So the way that we've set this up, I mean, myself and 4 of the other guys started out 2.5 years ago here. We made the commitment that we were going to invest in the company. So at the time, we put in roughly $2.5 million. With my continual investments in that, we're probably up to 4 to 5 as a management team, which for us on a personal level is a big investment. Ross, I think, in the last year has put in about 60 million. And so in terms of board and management, we're fully invested. And these are not seed shares or cheap shares. These are buying in the market, buying in block trades, buying in financings, and doing it reasonably regularly. So I'd say we're investing alongside shareholders, and our exit strategy is really long-term. There's no desire to be selling anywhere along the way here.
Right.
And in terms of remuneration, on the other side of it, Ross is known to be fairly frugal as a shareholder and a chairman, and we've taken that same sort of stance. We set our compensation to be roughly in that 4th quartile, so the lower end of the scale. We'd like to see that performing in terms of share price particularly, but also on the assets, will give us a bit more return because we've actually met goals and expectations. So we've done it a little differently, and we've not also linked it all to options, which some people see as sort of free money. So you have your base remuneration, which is 4th quartile, then you have your own investments, and then you have some long-term incentives that generally are linked more to performance.
Right. See, I think it's worth pointing that out, and the reason is because people in chat rooms, forums, our subscribers, they throw the accusation, well, yeah, they got some money in the game, but they're pulling these big salaries down, so they kind of don't care. It doesn't matter to them whether it works or doesn't work. They are not truly aligned with us. But what you're saying is a significant part of your wealth is invested in this business. You are directly aligned because you're buying in the market. They're not options, and people need to understand that.
Yeah, and probably on a personal level for me, I'm going to say 1/3 to 1/2 of my investable net worth is in this stock.
Right.
Anything that I'm involved in as a manager or a board member, I put my own money in because I believe, why would you get involved in something and expect others to invest in it if you don't yourself? So
right.
We take it personally in that sense.
Right. So it's in the management's interest to make the right decisions. You've also got Ross, Richard, also Lucas Lundin. Is he still in?
Yeah. He's still on a couple of percent anyways, yeah.
Right. So you got some guys who know what they're doing and opened a few doors, and you've got the capital to be able to deliver the strategy which you're working towards. I suspect that'll change as you find new assets or not, and you'll adapt accordingly. But thanks for the update. I think that's been really interesting to hear. There's a lot happened. The refinancing sounds fantastic. The new investor involved sounds, well, I think a lot of people will be very jealous of that. We look forward to sort of seeing the assets come on and the ounces start being poured.
Yeah, no, appreciate talking again, and maybe we do it again in 6 months, and we'll keep moving forward. We're not going to sit still.
Beautiful. Thanks, Christian. Appreciate your time today. Good luck. Speak to you soon.
Thank you.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.